Time for Hot Picks. Our guest is focused on the healthcare sector. We're joined by Don Nesbitt, Senior Portfolio Manager at FM Investments. Thanks very much indeed for joining us. Start off with Abbvie. Can you tell us why this one catches your eye, please?
Sure, and thanks for having me here. Well, let me just kind of back you up just real quickly with why healthcare in general. And that's because you get a pretty good earnings growth at a reasonable valuation. So, obviously the hot story has been AI tech for the last couple of years. And rightly so because it's got the growth. But the healthcare industry in the S&P 500 is expected to grow about 20% annual growth over the next 5 years. Compare that to the tech sector's 22.5%. But the healthcare sector's selling at a relative discount of about 20 times those forward earnings, and the S&P 500 is at 22 times, and the tech sector is at about 28 times. So when you look at the PEG ratio of this sector relative to the others, it's actually the most favorable. In other words, you're getting the best growth for the lowest price. And so that's why we like this sector right now. So going into one of the names you talked about, Abbvie, a large biopharmaceutical, fell out of favor over the last couple of years because they lost one of their blockbuster, the exclusivity on their blockbuster drug Humira. But the other drugs coming in through the pipeline are doing well. Right now, this stock is got about 11% compounded annual growth. It is trading at about only 16 times earnings. That's about a 30% discount to the industry as a whole. And as you mentioned, it's yielding 3%. So this is a great opportunity to get a what we call a dividend growing stock.
And they are working on obesity drugs. I guess you have to these days if you're a pharma company.
Yeah, everybody is, right? So, and that actually is a good segue maybe into our next stock, which is also a large pharmaceutical, Pfizer.
Okay.
Pfizer is suffering from the post-COVID hangover. They did very well with the vaccine during the COVID, but then those sales began drying up, and the market has priced it very cheap at about something like 8.5 times earnings. But because that stock is so cheap, you're getting a yield of almost 7% on that. And as you just mentioned, recently they made an acquisition to get into the weight loss drug area. And but I would look at that as an option. They've got a lot of other good products in the pipeline, solid earnings growth. They've overcome the the COVID hangover, so to speak, and represents a great growth good growth and you're getting paid to wait at almost 7%.
That's a big yield. I mean, would the company be inclined to? Well, I guess they'd be very loath to cut it, but you hear this argument: well, if you're not getting paid if you're not getting rewarded for a dividend, why would you pay such a high one?
Yeah, so this is an anomaly almost that you are actually have this potential growth that you're getting paid for. The cash flow is solid. The other thing that has happened over the last 4 quarters, out of all 3 stocks have beat their earnings estimates, which is one of the things we like to see. But Pfizer in particular has done a really good job because of the low expectations around this stock. So we think that this could continue. Again, I think the obesity play is more of an option, and the focus is on its regular drugs and pipeline.
And then finish off with Medtronic, if you would. What do they do, please, and why do you like the look of the stock?
Sure, Medtronic's in a little bit of a different industry, so medical devices, and while we might not have heard the name, we all are familiar with probably their flagship product, which is the pacemakers. So they're very involved in that area, in the cardiovascular, but they're also working into other areas like surgeries and producing medical devices for that. They've got very strong growth again. They've got a strong R&D. They plow back almost 10% of their sales into R&D. And again, not as quite as high of a yield, a little bit under 3%. But And again, it's trading at a discount of about 30%, I think, to its peer group. And again, you're going to get growth and get paid to wait for it.
Don, thank you very much indeed for joining us. Don,
Thank you, Andy, and have a great day.
You too. Don Nesbitt, Senior Portfolio Manager at FM Investments.